Now, I was just thinking that you have a great thing that you have at hand there. I mean, Prashant just make mention of that, but it just seems like we have to find or not, maybe you have to find a way to kind of get it where the regular guy on the street can kind of use it, right? But the passive investor, so they can kind of find, what geographic location to invest in, that type of a thing. It just looked like, it's something great, but how can we get it into the hands of folks who can use it in a layman's term, and make a good decision about their investment? I think that would be very helpful.
Right. No. Passive investors, they can now use it very easily by realtyquant.com. They would just get like a number. This market is like 40% overvalued, and they will get other metrics on that number. So to passive investors, this is really available in an easy form, because it's just like, what is easier than having a number? Like, this number is what's driving everything for you. Where it's like more interesting question is like we discussed, like some of the institutional integrations, if you will. But passive investors, they do, that is something that they do have available, and they do use it, and active investors do use it. Like, I have like active investors who, they use our data and purchase our data. But again, is this like a big market where that provides the biggest economic value? Probably not. It would be something that is very much at the institutional level. I feel because they just have a different perspective, and they kind of care more, like even passive investors, even though they can diversify a lot, it depends on their relationships. They kind of trust their sponsor, and they're thinking, okay, my sponsor has done their due diligence, and they don't know that their sponsor has not done any market due diligence of something like this, because their sponsors virtually don't know this thing.
Right.
And so
this is awesome. This is awesome information. I mean, passive investors definitely can go to realtyquant.com to learn more about the data that you provide, and you talk freely. Discuss this again and again, multiple times. But to your point, at the institutional level, maybe this data can be commercialized and put to use. I mean, you are talking about, you are from, a Cornell in finance major. You have produced something which is not being utilized too much. Which I personally feel, and that is something maybe we should take it offline and discuss it, how we can kind of put this thing together, package it together, and bring it to the market. But all in all, I just want to say thank you, Stefan, for your time today. Your insights have always been very helpful. The important thing is, passive investors should understand that there is a lot of information available, and a lot of brain power has been used to produce, to give you the markets, where you can buy. I mean, you can potentially buy the data and then do the, do your own campaigns and search for your own properties just by buying this small piece of data. And make a business out of it. If I were you, I would just buy your data and put 5 guys, start calling those properties and start buying those properties like left and right. I mean, if I know that these are the markets which are going to be stable, and potentially I could find a value add opportunities in those markets at a lower scale. I mean, I don't want to go into 200 plus units, but if it is anything below 100 units, I mean, I feel like that there's a lot of opportunity for, small time, mid-size operators. So how can anybody reach out to you? I mean, what's your contact information, Stefan?
Yes, absolutely. Yeah. And thanks, Prashant. So if I may add, like, to your point, I do feel that, I do feel exactly like you mentioned, that passive investors, based off at least my kind of studies of this, just my perspective, is I feel like it's very beneficial if they invested in under and fair developed markets ahead of recession. The only way they can actually get that for many different markets anywhere in the US is, that I know of, is really realtyquant.com. The other way is they have to have like a huge subscription for tens of thousands of dollars at Moody's, and then get it in some way. And I'm not even sure how you get it then, actually, because some people who are signed up, and I don't think that that's available. But as far as so definitely, like, pick your sponsors wisely according to their skill with their property, but use our data and select sponsors in those markets that don't filter very high. Because even if you very high, it's very overvalued. Because even if you pick your skilled sponsors as a passive investor, the market side could take it away for you. And we've been seeing that already, like with Austin and Boise and Phoenix being down like 8-9% since the peak already at this point in terms of their housing markets. And commercial multifamily, okay, it's differently valued, different valuation approach, and so on and so forth, but really highly correlated. And so from that perspective, yes. So passive investors, pick your sponsors that you have a relationship with, that you know well, that are strong operators, and you execute the property side of your deal. But use a filter through market data such as Realty Quant, where you would actually not be in the wrong markets with those right sponsors, but in the wrong markets as we enter a recession. And so that is where I think it's very important and very, very, very useful to them. And so, the best way to reach to me, again, it's the website, realtyquant.com, and people can find me on LinkedIn as well, Stefan Tsvetkov from LinkedIn.
Thank you so much, Stefan. This is just really amazing.
Thanks
for breaking it down the way you do. Really appreciate what you do. Thanks for coming on to the show today.
Thank you.
Thank you so much, Stefan.